All right, good morning, everyone. Okay, go in here. Okay, last night obviously had a monster evening on the back of the FOMC meeting, and the fact that Bernanke decided not to taper at all on the September meeting. The consensus going into the meeting was really I would say consensus is probably 10, but anywhere between 5 and 15. Maybe the average was somewhere between 5 and 15, but all the big boys were really calling for some sort of taper. Had a lot of somewhat strong language. Guys are saying they'd be very surprised if they didn't. Guys are saying that it's almost a guarantee. I mean, there's a lot, and we're talking about the big investment banks, the Goldmans and the J.P. Morgans and the Morgan Stanleys of the world. Really pretty much all in the tapering camp. So obviously we had an incredible surprise. Anytime the expectations on one side and you get the something that totally unexpected, I think B of A Merrill was the one and only major that forecasted that they would hold off tapering until December. So I think really important. Obviously, you see every sector going up across the board. Big rally out of precious metals. We saw some of the gold stocks up over 10% in the States. So really just big surprise there, and total reversal out of those stocks. Asia also obviously had a nice follow through on the back of that. I think Japan lagged a little bit simply because the yen was stronger versus the dollar, but the rest of the region really pushed hard. I mean, you had India, I think it was up over 3%, we had the rand, which obviously moved extremely hard overnight on the back of all the emerging market currencies because of the fact that U.S. rates dropped. Really just took all the emerging market currencies up higher. So. Very impressive overnight. And then yesterday after hours, we had Remgro, which announced full-year earnings. Headline earnings per share came in at 11.09. I think it's a touch light from 11.30 expected. The revenue number was a small beat at 16.45. Expected was 16.23. And divi per share came in at 2.01. Expectation was for 2.16. It was a little bit more difficult to really look at these numbers because of the refinancing out of Mediclinic. Who's saying that? And so that made the numbers a little bit more complicated to look into. But if you look at the NAV per share, it's up 34%, which is a huge move to 204 Rand 83 cents. Book value per share up 10.8% to 115 Rand 18. And when you including the Mediclinic refinancing costs, earnings per share were down to 8.54. So I think all in all, maybe a small miss out of Remgro. And then we have. It must be fine because these excellent. And the excellent Joe Burger saying anything. All right, and then we've got a lot of stocks that are going to ex-div today. Tomorrow. That's all mutual. The GRF, IPLs, S&Ts, GNDs, and ARIs. There's a couple big divvies in there. Imperial and African Rainbow is in there. ARIs, African Rainbow. So those are quite reasonable divvies. So I'd maybe pay attention a little bit more to those today in particular than some of the others. So just keep an eye on that, and let's just make sure that you don't get caught up in that going into tomorrow. All right, we had Japanese trade balance that was a little bit better than expected. Exports better than expected. Imports were light. We also had the All Industry Activity Index, which is a little bit better. We had Swiss watch exports that were out this morning at 0.5%. I'm not sure what the expectations were for that, but it doesn't seem spectacular. We've got retail sales ex-auto in the UK. Obviously, the closeout today at 12 o'clock just makes things even more crazy than they already probably would be. And then you've got initial jobless claims at 2:30, current account balance. We've got local interest rates, Philadelphia Fed numbers, existing home sales, and leading index. And we've just got so much going on today, following on the back of what was already a monster night out of the Fed. So I mean, I think it's really just a hell of a lot going on. All right, let's jump into maps. Okay, really what I was going to show, because pretty much every single thing on the entire board today is obviously going to be opening up significantly higher. So rather than try to show, a lot of the single individual stock charts, so I thought maybe we'd have a look more at the bigger picture, and just go through some of the indexes and where we really are in the scheme of those things. I mean, if you look at the S&P, obviously we made a breakout there in the S&P. You can see here, I mean, the coming from this little trough on this continuation pattern, it's all the way down here at 1630, and then we're breaking out at 1710. So there really could be potentially 80 points of upside, which would put us at about 1790 on this breakout. I mean, that's a hell of a long way away from here. Percentage-wise, it's really not. It just seems like such a big move now, but that's what we're looking at, I think, potentially on this technical breakout. If you look at German markets, they're confirming that breakout in the States. You're having the exact same breakout in Germany. Really, we had the breakout a few days ago, but in terms of taking out all-time highs, that also happened about 3 days ago, kind of front-running this move in the States. And you can see, I mean, the targets on this are also incredibly significantly higher out of German, the German DAX. So I really would say that we could. I mean, I don't even want to try to throw a target out here. It would be so much higher. So bottom line is we're breaking out. There can be a hell of a lot of room to the upside here, and I don't know how many people are caught on the wrong side of this. Let's look at the Rand. This is actually probably one of the biggest things. I don't want to look at this too lightly. Obviously, the 980 is the monster level, which we closed at more or less at yesterday. You can see we punched all the way through. We're down at 957 right now. But I think what's really important as well is we're even taking out the highs of the Rand, going all the way that we saw on the bump up in July. I mean, so we're making new highs on the Rand today, going all the way back to May, when we really had this breakdown. I think that's incredibly significant. I would expect that we'll at least come back down, either to the 200-day moving average or where we broke out from, one or the other, which is really around the same level, around 935. But on this breakout, I mean, I actually think technically it's saying that there could be more room to the upside than this. But the bottom line is a 200-day moving average is sort of 935 level. One or the other probably is going to get tested over the next couple of weeks. This is such a significant break here for the Rand. So let's keep an eye on that. I mean, that could be the one thing that I can think that could kind of maybe cap our market in the meantime. We'll look at the U.S. bond market. This is also was a really significant move that we saw on the back of the no taper. 2 days ago, we basically got a move through this trend line. I don't know, maybe signaling that this was going to happen a little bit, but you can see here today, I don't know why it's showing the same chart or the same bar twice, but we really got a big rip through this trend line. This trend line's been going all the way back since May, really when the data started to improve drastically. It was here in June you saw this big rip higher in yields, where you saw Bernanke mention that they might start to taper at the back half of this year. And the fact that we've dropped support on this trend line here, really significant. It looks even more steep if you look at the 2 and the 5 year, the yield drop in percentage terms. So this is really typically very stock market positive. So this is I think just goes hand in hand with what we're seeing out of those indexes that we just showed now. And we'll also just quickly show the Aussie. I just wanted to show this as we opened up, and you can see here we're basically taking out. I'll actually jump into let's look at a 30-day real quick. But you can see here where we opened this morning. We basically opened up here at all-time highs. We're kind of fading back down toward where we're testing all-time highs, I should say, up here at 94.50. 94.60. If we take out 94.60, I mean, we'll be looking just like all the other indexes, which are just really breaking out to the upside. If we get above 94.60, I would think at least in the near term, we've got this sort of move here, on the breakout from this level, which could really take us, maybe call it another 700 points to the upside on the Aussie. All right. Let's look. The last thing I'll show you is maybe just one of the locals. A stock like an Impalas that came down and tested support. I mean, obviously this thing's gonna push higher early on this morning, but it did come down, tested some support around 120 as of yesterday, minor level. I mean, we could go through a lot of these individual stocks, but I think there's really just no point because you're going to get such a spike in the open here. Everything's going to be moving away from what we're showing you anyway. So just keep an eye on this morning stocks that are making new highs. New all-time highs, and any stock that is kind of maybe breaking up out of a downtrend. And that's it for today, guys. Thanks a lot.